All right. We are still unpacking the adjustments. We are looking at the profit on disposal of fixed assets, profit or loss on disposal of fixed assets. The beginning is the 1st of March 2018 and the end is the 28th of February. This calculation we have already done, but the only thing that is different now is the amount. This vehicle now was sold, the selling price. All other details are the same as our previous calculation, but the only thing now that is different is the selling price. The selling price is now 170,000. In our previous calculation, the selling price was 195,000. So the procedure is the same. When you are selling a vehicle, the first thing that you need to look for is the date of sale. The date of sale is the 31st of October 2018, and then you need to check for the cost price. You need to check for the accumulated depreciation. One thing that is important under accumulated depreciation is that you need to make sure that the accumulated depreciation is on the date of sale. So this depreciation that we are having here is on the 1st of March 2018 when the asset was sold on the 31st of October. So we need to calculate the number of months for which we have used this vehicle and be able to depreciate it accordingly. When you count from March to October, that is 8 months. March, April, May, June, July, August, September, October, that is 8 months. And therefore we need to calculate its depreciation, and the depreciation rate is 25% per annum on the diminishing balance method. Right. So 400,000 cost price minus accumulated depreciation at the beginning of the year, which is 175,000 to get 225,000 carrying value. Depreciation is calculated on the diminishing balance method, is also called the carrying value method. So that is why we need to have the carrying value. The carrying value in this case is 225,000 multiplied by 25% multiplied by 8/12 from March to October. So 225,000 multiplied by 25% multiplied by 8/12, we got 37,500. So this 37,500 is the current depreciation. This is depreciation, the current depreciation, and this current depreciation will go to the income statement under operating expenses. Under operating expenses, and it will be recorded as depreciation because it's for the current year. This 37,500, the 8 months for which we have used the vehicle from first, because these 8 months fall within our current accounting period. So therefore it will be recorded under operating expenses as depreciation. So now let us now have the correct accumulated depreciation. Accumulated depreciation now on the date of sale. Accumulated depreciation now on 31st October 2018. Accumulated depreciation on the 31st of October 2018. You have 175,000 at the beginning plus depreciation for 8 months. That is 37,500. That is giving us 175,000. 175,000 plus 37,500 equals to 212,500. 212,500. 175,000 plus 37,500 equals to 225,000. That is an updated accumulated depreciation. 400,000 cost price minus up to date updated depreciation, which is 212,500. 400,000 minus 212,500 equals to 187,500. 187,500, which is the carrying value. The carrying value for this vehicle is 187,000. Now this vehicle was sold for 170,000. This vehicle was sold for 170,000 when the carrying value is 187,500. It was sold at a price which is less than the carrying value. 170,000 minus 187,500, there is 18,000. It's 170,000 minus 180, that is 17,500. That is 17,500. 187,500 minus 170,000. Yeah, that's 17,500. So we have made a loss. There is a loss on sale of an asset. There is a loss on sale of an asset which will be recorded in the income statement under operating expenses. This loss on sale of an asset will be recorded in the income statement under operating expenses. There is a loss of 17,500. How do we know that we have made a loss? We have sold a vehicle that's worth 187,500, that which is the carrying value, but the selling price is 170,000. So the selling price is less than the carrying value. Therefore, we have made a loss of 17,500. And this loss will be recorded under operating expenses in the income statement as loss on sale of an asset, and the amount is 17,500. And do not also forget to include depreciation. Put depreciation under operating expenses, because this 37,500 is the depreciation which occurred within our accounting period, because our accounting period starts on the 1st of March 2018. Right, that is loss on disposal of fixed asset. How do you calculate it? The calculation of loss on disposal of fixed assets.